The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Friday edition. The Friday edition is the edition whereby we get a little bit more detail into the ChapmanWave methodology. So if you have questions about it, if you're using it, love to hear from you. Great show with Steve and Tom just last hour, and Steve kicks us off 9 o'clock. And let's see. So today is March the 22nd. March the 22nd. Oh, January, February, March. Almost finished 3 months. January, February. Yeah, 3 months. That's amazing. All right. So, and today we'll have, let's see. So Nico is out. I think he's at some competition, I believe. Well, good luck, Nico. And so that's going to be very interesting because Nico doesn't, you know, when you get to a certain age, it's really tough to get body blows, and he seems to do fantastically. I'm really impressed. So, Paige Clark will be, of course, Paige is always with him in that hour, and Paige will be doing Living a Primal Lifestyle today. So it should be a great show, very interesting show. Going to see Paige. Oh, maybe Paige gets a chance now to go on to her own pet subjects that maybe she never gets a chance to talk about, or just doesn't have the opportunity. That'll be very interesting. So looking forward to the show. Then, of course, we get Daryl Martin. We've got Dave White, Ken Shreve, and Tom O'Brien wraps us up 2 to 4, and Dave White, of course, joins him in the afternoon hour as well. So fabulous shows coming up today, and there are a couple of things I want to talk about. I had a question, and it's really a very good question. Let me run the numbers. The numbers are: the Dow's up 79. Yesterday, of course, the Dow was down 90. Ooh, there was this big thing going on. Fear. The Richard Arms short-term trading index went really high. And now it's very quiet. Nobody's saying anything. S&P's up 9. Yesterday it was down 10 or 11. The Dow's up 78. Yesterday it was down 90. So it's really fascinating to me to follow this. Now, I'm going to talk about things in the perspective of the ChapmanWave and why, even though we've got leg D in the Dow, and even though there could be a hazardous couple of days coming up in early next week with Cyprus and next few hours, I think some of the over the weekend factors will be starting to be determined. What I'm really looking at here is the way the chart pattern formed. This is where I'm becoming much more cautious. There are a number of factors, so let me give you the numbers. The Dow's up 77 at 14,498. It needs to get to, let me get this right here. It needs to get to the last high of 14th. Let me just move that over. I'm going to just move this so you can see the charts as if they're looking at daily charts. And what we're looking at here is the high of 14,539 at peak D. Let me just open that up so you can see it nicely. Look at the way the black line, that's 9 period. I'm slowly changing some of the colors. I'm trying to get it so that I can see. Looking at it now. It looks great. But it depends on my very small device. It's not. You can see it, but of course you don't get quite the same definition. Now, what's really important about this is we closed underneath, the Dow closed underneath the 9-period exponential moving average briefly yesterday. I shouldn't say briefly. It closed underneath it. We'll see if it's briefly, because today it's already back. The Dow needs to go above 14,511.73. The high today so far is 14,511.15. Now, why would I make a big fuss about it, even if it's just 1 penny that it needs to break above it? Because I want to engulf the upper part of this candle. It doesn't have to be anything about the bottom. I said to subscribers, we do not want to go underneath the low of yesterday, because that changes the pattern. I'll talk about the pattern in a moment, but first let me say the S&P is up 9. It is up a nicer percentage. In other words, it is up 0.58%, while the Dow's up 0.53. I like 500 stocks to be moving and confirming slightly more than the 30 stocks. I do like that. Most important is that we got information for the lead-in music that we had for the show. It was Art Van Dam on that recording. It sounded fantastic. And I thought, if that is a harmonica, that is unbelievable. But it was pretty darn good for the accordion. And there was a question in the gym. A number of us were wondering. It sounds like a harmonica, but then there was the last chord that he played had notes that are not on the harmonica, because you can only get a couple of notes for the chord. And that said to me, oh, that has to be an accordion. Huh, nice. Thank you, Al. It's my wonderful engineer and programmer there in the studio. Now, this is what we're looking at. The comp index is up 13 at 1553. And Apple is up 3. That helps. It's up 3 at 456. Apple is an important component of the Qs. I mean, there's just no question about it. So this is nice that Apple is up. Now, gold is down 6. It was down more before. I don't know if I should do each thing at the same time. All right, let's just do that. Okay, I've decided. Gold, GLD. I'm going to go to the GLD. See, the GLD has made a peak C if there's no new high bar today, and the pattern that I drew above, you see that pattern there? I said the dreaded H, the lowercase h, can go to an M even if there's a larger arch formation, especially if the technicals are very strong and the price just does not perform. That to me is imperative. You've got to understand how chart patterns work. So for me, it'll be really important if the GLD breaks into the 158s next week. That'll say, now we've got to take seriously what's going on over in Europe, because we're going to look at gold becoming a harbinger of fear, a currency of fear. Okay, now I've got that out the way. But look at this chart. Give me a break. Oops, let me type it in here. SLV. I mean, look at this. Is that the way silver should be acting? The dreaded H. Now, what is the dreaded H? I got a CD, a book, been out for a while, quite a while, and these chart patterns never change. It doesn't matter how long we've had this CD out there. Nothing changes, because a pattern is a pattern. It's human nature, and basically what we're doing is we are assessing what the human nature patterns are. So in this particular aspect, gold is producing a slightly bigger pattern, but it's still the H goes to an M pattern. And to break out, you need to see the technicals and price confirmed. That's why I say 158 for the SLV. Now, let me just quickly go to this, because some of you maybe are new. You don't know my work. Let's go to chapter 17 of the CD. There are 20. How many chapters are there? 27. I should know after all these years. Chapter, what did I say, 17? Right there, the dreaded H pattern, and that explains it. But most importantly, this is the pattern, and it can keep going down. And I sent to subscribers, and for folks who have done my most recent Master Traders series, because I'm sending them chart patterns as they occur over and over. If you take my seminars, you will start to get these patterns. I will be sending them out. Now, what's important about this is that H pattern, look there, can go to an M pattern, and that's it. And that's very important to be able to assess it. But then there's a pattern that I've been discussing, and with I've been showing subscribers that is a high-level consolidation up at the top of the dreaded H pattern. That could become a cup formation, and it could be very positive. And that I showed them this morning, yesterday and today, but today in particular in the diamonds, the Dow Diamonds 120-minute chart. So we've got gold down 6. Friday is often a day of weakness for gold. Silver's down 56 cents at 28.65. Platinum is up down 3. Copper is up 3 at 3.4. Crude oil is stuck in that range. It's at 93.06. And bonds are up 2.30 seconds. Bonds, look at this. This is the USM. Let me just show it a little squash. There you are. Now, it could be a W pattern, and that would be very positive. But when you've got the stochastic and the MACD moving up, and the price hasn't gone anywhere close to the previous high, I have to say that 144.21 is going to be the very strong resistance appears. If bonds, and let's go to the TLT, because most of you get the TLT, but you might not get the bond chart. The bond chart's doing the same thing, and I pointed that out before. There are conflicting patterns. There's a W pattern, which should be a huge successful pattern, but in fact, it has to overcome these arch formations, and these arch formations are really very strong, if you understand them. It says that there is limited upside as a kind of a rectangle forms. Boy, this is getting a messy chart, but anyway, this is what it is. And that's what you got to fight against. You got to get out of that range, either up or down. So the TLT will break out if we can go to 120.50. Let's call it 120.71, above the most important left side high, and underneath it breaks under 114 and it goes down. I think it's just stuck in a range. I wouldn't be trading except short-term trading bonds in the TLT. The Fed said we're going to keep that price up. We are propping it up no matter what. Now, a couple of things. Just EUR USD. That is the currency pair trying to make a turn here. The stochastic and MACD are acting quite well. If by Monday it hasn't gone above 1.310, that's the currency pair, then it's stuck as well, just stuck in the sideways trading range, making little cup formations and arch formations, and that's going to be important. Now, there's the other one, USD, JPY. This is the currency pair, dollar yen. Now, that made a peak C1, peak C2, top in the ChapmanWave technique. That says, watch out, because, it could, in fact, produce the same kind of pattern that is the one that I talked about earlier on, which is the dreaded H becomes a successful test and then forms a cup formation to try to go back to the top. But it has made a peak E, if it doesn't make a new high today, which it won't. And that peak E says at 96.704, if, in fact, the MACD and stochastic hold like this, and I've already drawn this in, that rectangle, this is a high-level consolidation. What do I mean by that? I mean, if you're looking at the dollar has, in fact, done exactly the same thing. It is producing a peak E top. MACD and stochastic have turned down. Price is still holding so far above the key 82.05 level. And it could become a rectangle. So far, it looks like an oval pattern. If it does not break 82.05 by Tuesday or Wednesday of next week, but instead is trading back to even, it's at 82.42, anywhere in the 82.90 area to 83.02. Sideways consolidation, high-level consolidation. That means that we could start to see leg D up next week in the weekly chart. Hey, what does it say for the SPX weekly chart? Peak C being made today. If there's no new high, I'll talk about some other things as well. And we'll take calls at 877-927-6648. Dow's up 82, S&P's up 9.36. And we'll be back with Michael from New York.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the Dow's up 83, S&P's up 9.5, and I didn't finish quickly to do the IWM. I was asked about the IWM. IWM is, in fact, in peak C, unless it makes a new high today. Can it do that? Day's young. I have my ChapmanWave trend indicator. I've developed all these different indicators, and my trend gauge says that that was last night, said that within 1 to 3 sessions there should be a very sharp move started by the E-mini future, S&P E-mini futures, and should be carried over into the S&P, and we've got that. It doesn't say anything about new high. We've had a spectacular turn from the lows to the highs of today so far. So it's done its job. Great percentage, just an absolutely fantastic percentage performance on this particular ChapmanWave trend gauge, both upside and downside. So we're going to go to Michael in New York. Hi, Michael. How are you?
Good. How are you doing, Basil?
Very well, thank you.
EIP is the...
Okay. Now, if I recall, I had this all notated once on my black charts. I think have you called about this before?
Yeah, over a month ago.
Yeah, I thought so. Okay. Now, what I'm looking at here, folks, BIP is trading at 37.60. Brookfield Infrastructure, is it Partners, LP?
Correct.
And basically, they try to find high quality assets and to generate. This is ready for stable cash flow, I think, right?
Mm-hmm.
Okay, so what I'm looking at here is the monthly chart has had just a spectacular move. I call this the worm. What it does is like climbing. It just climbs the 9-period exponential moving average. Intra-month, yeah, it has 2 points. It has 20% or so between the top and the bottom. But at the same time, what it does is it just constantly makes that 9-period exponential moving average the support area. Well, the candle forming in March for the very first time, this is the candle that says whether you go up much more or whether you go down much more, you're coming back to retest somewhere around 38, I'd say 37.90 to 38.50. So it's like a magnet, unless two things happen. The first is that it closes one out of the next 2 months underneath the 9-period exponential moving average. That'll set off a trigger to say, okay, now you've got a part B is watch the MACD, which is still very strong but making an M shape. The relative strength is giving a signal that says, be careful, it's getting toppy. And my on-balance volume has just given a signal to say, monthly chart, month is not finished, but be careful because there's a chance upside is limited and you could start to see over the coming 2 months slightly lower highs and slightly lower lows. I don't have a sell signal yet or anything close in the monthly, but the weekly chart says I've made a peak E, and that peak E in the ChapmanWave has got a kind of a Roman candle from last week, which says at the bottom of 36.14, not so far away, just 1.5%, 5%, is probably going to be tested. I can't put a down arrow. I can only put a red plus sign above it. This is the weekly chart, folks. If you're new to my work, the chart I'm working on right now in the middle is the weekly chart. Now, I didn't have a chance to do the... I'll do it right now, real quick. I just want to see what this makes a habit of doing. I like stocks to tell me their own character. I don't want to predict the character. I want it to say, hey, I very often make peak Ds. Hey, I very often this, I very often that. I want to know what they do. And in this particular instance, it goes, this is not rare. This is an E, F, and then it makes the G. And that I needed to see. I'm pleased I did this. So now I'm getting a much better pattern. I'm going to now draw in the rectangle right here. And it's going to be a large rectangle, but within the rectangle, there's going to be an upper part and a lower part. It's trading towards the lower part right now. I'm suspecting that 36.14 to 35.73, I'd even go back to 35.33, is going to be the lower part of the range. And the upper part of the range could start to have a little difficulty if there's a lower high bar in April. It says be careful because it's going to take a timeout. But I don't, as I say, the stocks that climb this 9 moving average like this, don't over anticipate by saying, oh my God, it's going to go into a sell mode. It could go to a mini sell signal in the weekly and then a sell mode in the weekly. Monthly chart hasn't given anything. Now that is all confirmed by the candle of the 13th of March. That candle says, yep, this looks like it wants to test the lows. In fact, I've got a much clearer picture now. It confirms everything I've been talking about. I'll give you the wrap on that as soon as we get back. We've got a bunch of callers. So as soon as I get back, I'll just wrap it up for you, Mike, if you want to hold on. And then we'll go to Freeman, Rich, and Alex. All around the country. That's fabulous.
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trade weekly newsletter. The Gold Report has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back. Dow's now up 95 at 10.68. I won't have a chance to do this maybe later. I just wanted to quickly show you something that I gave subscribers this morning. It's a particular chart pattern I spent a lot of time on. This looks like a Marimekko design. This is the Dow Diamonds, and that was the pattern that we were looking at. The dreaded H becomes a cup formation, and we're looking at it in many, many charts. I don't know if it's going to work to get back to 145.35, but it should, and that's the pattern that we're trying to follow. That's why I wanted to remain long the Dow Diamonds through the DDM. We'll go back to Michael. Now, Michael, what I'm going to do is say this, that if you are long because of the dividend, I'm going to suggest that there's no real action to take right now. If you want, I see upside being limited. If anyone is long, if you know anyone who you're calling for, if you yourself are long, I would, if you want to lighten up a little bit here, I see no problem taking some profits. It's had a spectacular move. I just think it's got a high-level consolidation. There's going to be nothing much in it except for the dividend. And as someone said in the den, great dividend. I agree. I like it. If you've got a dividend stock, this is the kind of stock that's holding really well. I'm going to do a little more work on this. Maybe Tuesday, Wednesday, let's look at it again, because I'm suspecting that at some point over the next 3 to 5 sessions, maybe a little more, it's going to test 36.14 and then touch 34.19, the 200-period moving average, and then start on its way back up again. That's what I would suspect. because of the candle that was formed both in the weekly chart back on the week of the 8th of March and in the monthly chart that's being formed, but the month is not finished. I really do have to wait for it to finish. So I hope that helps you. Great eye, good stock. I would not be messing with it other than maybe take a little bit off to kind of reward yourself for a great move up, and that money should be dedicated to putting it back. And I'd be thinking about 35 to 34 if it gets there in the next 2 months or so is the place. Hope that helps you.
Thank you.
Have a great weekend. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hi, Buzz. How are you doing this morning, sir?
I have to congratulate you. You've been long. Micron, you still long?
Yes, but problem, I sold 75% of my position at $9.40. I net a profit, so I wanted to get out before earnings. So I only have 25% of my position.
Whoa. You only have 25%, but earnings were fantastic, and that 25% has in some way made up for the little bit that you took off. So
yes,
you're in a great position. Now, the reason why I think that was a great move on your part is because you remember the pattern that I drew in a long time ago? When you originally spoke about it, and I drew it in, and I showed you that there was a cup formation, and in the ChapmanWave methodology, if you break out of a cup and ladle, this is a very unusual pattern, not for me, but an unusual, because in most books you will just never see it discussed, but the cup and ladle pattern says it's not a cup and handle. I hate that kind of pattern, because when you realize what it is, most of the work's been done, and usually there's not that much on the upside left. I love it when you can get, like some people are able to trade the cup and handle and get in at the bottom of the handle. That's fabulous, because then you've got a very nice position and a cushion. What's happened here is it broke the left side high in the weekly chart of 9.16. Folks, we're looking at MU, Micron Technology, trading at 10.05, up $1. And what's beautiful about this, it was peak E in the ChapmanWave. Oh, just look at these patterns. Now, I'm going to talk about this again, and I'm not going to mention it at all, but Chris will know exactly what I'm talking about. And yes, this double cup formation. And this double cup formation says that what we're looking at is it made one cup and then pull back, and now it's making a stronger cup, but it's leg D. In the ChapmanWave methodology, when you take out the left side high, in this case 916, the week of the 2nd of March, that should go to a leg D. Well, we're in leg D. Where's it going to? What I'd drawn in ages ago, and that was the resistance at 10.23, and today's high is 10.10. So I suspect the monthly chart is in leg C up. It's really good. Yeah, I'm so surprised. You know, everybody keeps saying computers are dead. I mean, it's just a commodity, blah, blah, blah. And yet Micron, Gateway, a bunch of them have done really well. So I think you're in a great position. I'm going to suggest something. Keep your 25% position. Be prepared that by sometime next week there could be a pullback. Pullback says there's tremendous support between 950 to 865-ish. If it takes time rather than just price. And that's the point that I would start thinking that monthly chart is still so strong, weekly chart is still so strong, I would like to put the money back. I would be hesitant to put any money back now. You've had a fantastic trade. I've got to congratulate you. You got in perfectly, and it's just worked out well. And I would hold this position, and I would try to add, I would stay with Micron as part of your portfolio, because it really does say it's just gone to the most important candle, the high of the candle of 10.03 of June of 2011. That says the next candle will be the Roman candle to tackle the one of May, which goes to 11.41. But I don't know if it's going to do that. I've got a target of $11.87, and that should take through the summer. But I think you're on the right track. So keep the position. I'd be hesitant to say to you add to it at all. But if you want, I also don't want to say take profits now, because I think next week, if this holds and it only pulls back to $9.89 and then makes a new recovery high, it should make slightly higher highs, and then it should start a bit of a consolidation. Congratulations, Freeman. Nice trade. Nice position playing.
Thank you, Bob. I appreciate that. Thank you.
Thank you. Let's go to Rich in Orlando. Hi, Rich. How are you?
Doing well, Basil, and yourself?
I'm doing well, thank you. Actually, I'm doing really well because I've just been so enjoying my tennis lately.
Oh, that's great. That's always a good thing. Nokia, NOK.
NOK is trading at $3.41. It's down 4 cents. It's the 9-period moving average has been resistance for 3 days now. The monthly chart made a peak F top. I'm sorry, the weekly chart made a peak F top. And you didn't call me, right, on this one?
No, I haven't spoken to you probably for a month or so.
Yeah, I thought so. Okay, because someone called me about a week ago, and I said the only way I would do it is just to take a little nibble of it, because I'm getting signs to say that it's trying to form a daily base, but the weekly is still very weak. You know, do you have a position in this?
No, I do not, but I was looking to enter it if there was some kind of a pullback here, because it looked like we had like a high-volume top there earlier in the year, and then it's kind of been coming back down, and I was looking at it basing out here. But that was the reason for the call.
I'm inclined to say I wouldn't get carried away with the stock. There are other stocks in this price range that I would prefer to look at. I'm suspecting that if it does have a move, it's going to go to 360 to 365, the 200-period exponential moving average. If the technicals start to improve a lot, then you've got a nice bounce above 369, which is the 9-period moving average in the weekly, and then I think it starts coming back. Well, from $3.41 to $3.81 is a nice percentage gain, but I think your risk is that if it slips underneath $3.30, it could be money that's just sitting there doing very little. So my preference is, if you like the stock enough, I would say to you, rather buy strength. I would rather buy it at $3.48 if I can see that the stochastic's at about 35%, not 29%, and that the MACD has continued to hold. Now, I do have something that's very important. It misses by 1 day, so I can only talk about it as something to watch. And that is that huge volume of the 15th, if that was on the day of the low of the 18th, I would say to you, if this thing can go about 352 to 358, I would consider a small position, because you could have about 27 days of upside movement. It doesn't give you the price, but at least says you got at least a month of upside activity, but it misses by a day, and I don't use this as a silent signal. It has to be on the day, and I need to see the stochastic and MACD start to improve. So I'm going to suggest, do you have any position now at all? They disappeared. Oh, Rich? All right. Well, I'm not sure if... Hi, Rich, you there?
Yeah, I'm here. Are you there?
Yes. Do you have some position at all?
No, I do not.
Okay, you know what? I'm just going to say to you, leave it for now. Let's give it 2 days. Let's look at it again Tuesday. I don't mind giving up 20 cents if it's on the upside. I don't want to give up 20 cents on the downside. Let's give it a few more days, and let's look at it again Tuesday or Wednesday. Because if it does succeed in moving, it has a chance, based on the daily chart, not the weekly or the monthly, but it has on the daily, it has a chance to get to the 375 to 390 area. That's a nice percentage gain. But yeah. I don't want you to get trapped into a stock that looks like it's going to retest the 330 when it's a 346. Hope that helps you.
Thank you so very much. It does. Have a nice weekend.
Same to you. Let's go to Alex in New York City. Hi, Alex. How are you?
Hi, Basil. My brother-in-law has been trading a stock called Flagstar Bancorp, FBC. Yes. And the last time he sold it was in the beginning of the year, January 2nd.
Oh.
That was 2 days when it traded over $20.
That is fantastic. It hit $20.38. It was a peak F in the weekly chart, and it's gone straight down ever since.
Yeah, and he just told me last night he's bought back in. He's done this. You know, I've never liked the stock because it's had reverse stock splits.
Oh, that's right, yeah.
I always think a company with reverse stock splits is to stay away from. Do you think he knows what he's doing?
Well, I'm going to tell you this. That he might be a tad early, but there's a pattern that I've followed for a long time. It's a single leg A. In fact, I've even printed an A up. If you're looking at the charts, folks, we're looking at FBC Flagstar Bancorp. It's trading at $13.58. You know what I'm going to suggest to you? Hold off today. Let's look at it together. on Tuesday or Wednesday. Here's my reasoning. I know this pattern very well. There's a massive decline, and then there's a single leg A up, but it fails to take out the left side low, which would be $12.78, and then it starts a mini peak A, B, which takes out, B or C takes out the left side high of 1535, and it actually goes to a D, making this cup formation, the arch formation, but a much bigger one. Well, that's a very nice percentage gain. I'm going to recommend two things. One is hold off today if you really feel like he's been a whiz at this. And, you know, people get to know their stocks very well, and they trade them very. You don't need 7,000 stocks. You can trade 3 to 5 stocks over and over and over and do very well. So I respect what he's done, especially since the guy got out at a peak F top in the Chapman in the weekly chart up in the 20 area. I'm going to suggest this. Can you hold off just a little bit if you feel you want to get in to get an assessment of how it's acting and reacting to the market? Buy 10 stocks right now. You know what I'm saying? Just kind of get a feel for it. But I would not get the position itself until I want to see that it's able to close above the 9-period moving average at about $13.80, because there's time. If this is going to work, it's going to quickly take out 14.15, the high of the 19th of March. So we've got time here, I think. So hold off or just nibble on it, just a little nibble to get a feel to say, hey, I'm in the stock, and then we'll see. The weekly chart says be a little careful. It might be early, because if it closes under 1278, that 9-period moving average in the weekly chart is a strong repellent. The monthly chart is not anything to talk about because it's not that good right now. So let's hold off a little bit. Call me next week, middle of the week. Let's look at it again. I don't think you're missing out anything just yet. I don't want you to get into a stock that can very quickly take out a low of importance 13.19, and then, of course, the low of 12.78. And there's a chance it could do it. I need evidence of strength. So I've only got one strength evidence on the single leg A up and the pullback. I want to see if it can make another leg A up in the daily chart, and then I'll be impressed. A little mini one. All it has to do is go above 1382, and then I'm going to say, hey, I think it's interesting. So, Alex, good eye. It's your brother-in-law, right?
Yes.
Okay, and your brother-in-law's, he's had a good eye for it, and he obviously also doesn't mind being a little early. Maybe this is early, and it's a way to build up a position. Call me in a couple of days' time. Let's look at it again, okay?
Thank you very much, Basil.
Thank you very much. Let's go to Neil in Denver. Hi, Neil. How are you?
I'm good, Basil. How you doing? Happy Friday.
I'm doing well. Thank you.
I had a question on the technical side and wonder if you might go through it in terms of calculating how we do the expansion on the falling axe in your newsletter today. I believe.
Okay.
Ralph Lauren. No, it wasn't Ralph Lauren on that example. I believe it was the Dow Daily.
Okay, very good.
Yeah, so I just wondered if you'd go through that. Also, I had a question in terms of time and price on an oval formation, which I think you're using on Ralph Lauren.
Okay, so let's do the first thing first, which is a pattern that I've discussed. Now, it's actually much more noticeable on the SPX. When I was, some of you might remember that I was talking about this on air for a while. This is perfect for the breakout in the S&P. It hit 1530.94 twice at a peak D on the 20th of February. It pulls back to 1485. It made lower highs and lower lows. When it broke out, it went 1 for 1. There in the light green, you can see 1 for 1, a little higher to the upside. Now we've got another potential one, and I'll talk about that. It's a little clearer on the S&P, but I'll go to the Dow since that was your question, Neil. And we will talk about Ralph Lauren. Dow's up 81, S&P's up 919. We've got Neil and Lou waiting. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. And the question we have here from Neil in Denver is the falling axe pattern. And that falling axe pattern, what is that? I should grab it before. The falling axe pattern basically just says that there are, it's like a descending cone formation, and it says that there are... there it is. That there are lower highs and much lower lows, and it forms an expansion pattern that gives you a one-to-one formation, and that's exactly what we had earlier on in the S&P. We saw it, but most importantly in the Dow, it's forming, and it says that there should be a move from the low bar of the declining lower lows to the trend line itself, and then normally I would take it from the next highest low, because it doesn't always work exactly from the trend line to go up. But in this case, it would say somewhere around 14,585. That would be an upside target if there was a one-to-one. This would be an expansion at the top, so I'm not that sure it's going to work here. But the most important one that I can show you, because I'll show this again, is the S&P. That's clearer. And the S&P says that if it's able to clear 15.50, 9.50, somewhere around that. There's a real good chance you can immediately look at the left side for the next candle, 15.61.56, and then the previous high, which was peak C at 15.63.62. And that says there's a possibility that you can get an expansion from 15.38. I don't know if this is going to happen because this is the latest stage of a move to 15.57. So that's 20 points, and that 20 points should technically come from a trough at the bottom on the left side, and that would say from 1563. Yeah, it takes you to about a new high if I use this candle from yesterday. But if it actually succeeds and it really breaks out, then you use the trend line itself. That the breakout of the trend line, in this case, would be somewhere around 1556 to start the expansion up, and that goes 20 points on the S&P. I don't see that right now, so I'm always a little conservative. But it's amazing how many times it actually expands and it continues. The IYT did that a lot. So I hope that answers you. Now let's just quickly go to the oval pattern in the monthly chart. Was a very brief, and that oval wasn't the body of a stalk leg. That was an instant restart, and it went to a peak and then the double top at 179.90. Folks, we're looking at Ralph Lauren, which we are short. We're short from about 174.20. It's trading now at 169.12. But the reason why I felt more comfortable about this is that the left side broke to the downside below the lower 168.47 made on the 26th of February. So that said to me, I couldn't get that cup formation because it's broken down. So I hope that answers some of your questions. Neil, you there?
Yes, I am. Can you hear me?
Yeah. Yes, I can. So I hope that answers some of your questions.
I appreciate it. That's great.
Okay, so you know what, we're going to run out of time. I've got one caller left. Call me Monday, and I'll talk a little bit more about the oval formation. It's a very good question. I'm now calling it the golden egg. So call me if you have a chance. If you're around, you're able to call. We'll talk about it. It doesn't matter. Anytime next week. It's an important technique. Thanks so much for calling, and thanks so much for being a subscriber, Neil. Let's go to Lou in Nashua. Hi, Lou. How are you?
Fine. How are you, Basil?
I'm fine. Just before we run out of time, and Paige is going to take over for the next show on health. You wanted to ask about
gold. I was thinking of getting a call, 750 call
on the GLD.
No, on gold futures.
On the gold futures. Okay. I'm looking at the gold contract now. This is what I'm looking at. It's made a peak D. If it doesn't make a new high today, 16.50. Yeah. It's made a peak D. It's holding quite well. I don't see incredible strength in it. So it's either going to come as a surprise Monday or Tuesday, because it's just it becomes you know what? I'm running out of time. I don't want to just rush into something. We might miss it, but I can talk about it Monday. I see it holding, but I don't see any great strength yet. So I'm going to say, for me, I'm going to have to say hold off until Monday, okay?
Thank you.